Air India, Jet Airways, Kingfisher, Air Deccan, SpiceJet, where these are the some of the airlines which have started their company, but then afterwards, after a few years, they are not able to survive and they have to close down their aviation business. Now that is why aviation business is considered one of a very difficult business to do. Everyone knows about it, but here is one company which has done very well when it started, and till now it is one of the leader. And today we are going to talk about that business. So be there at the end. I am going to talk about this aviation company which is in our buy list, and you can buy also from here. So be there. We are going to talk in detail about each and every aspects of that. So hello friends, welcome everyone. My name is Tapadoshia. Welcome to my YouTube channel. Do click the below link and do subscribe to our channel, and also like this video. So let us start and going to this aviation company. And the aviation company which I am going to talk today is nothing but IndiGo. Well, yes, you know, you are right. IndiGo is an airlines over the years has done very well. If you see from last 10 to 15 years, it is emerging as one of the leader, and now it's the leader of Indian aviation business. So yes, well, let us talk in detail about IndiGo. So talking about the IndiGo, no, it is almost a large cap company, and you can see here the market cap is almost 94,000 crore rupees. So it's a large cap. Also, if you talk about the shareholding pattern, you can see 72% was there almost during the quarter 3 financial 23, around 71.9 quarter 4 financial 23. However, that it has reduced to 67.8. One of the main reason is that Rakesh Gangwal is selling his stake. You know, Rahul Bhatt and Rakesh Gangwal have started this IndiGo. So let us talk about that in detail. And there was one problem going on between the two promoters. That's why Rakesh Gangwal is going out from the company. So talking about the company is started in 2006 by Rahul Bhatia and Rakesh Gangal with one plane, and everything was going on fine. But before few years, so there was a fight between the two promoter, and after that, Mr. Rakesh Gangal has decided to leave that company. So he is given a resignation from his directorship. Again, IndiGo is one of the most efficient low-cost airlines with a market share of 54% in Indian aviation sector. You can understand 54%. That means it's one of the more biggest leader in this market, and that is why. But the way it has performed over the years, we should give him a complete credit. The company has done extremely well. Again, from a carrier with one plane to fleet of 300 plus aircraft today, this is fabulous evolution has driven by several factors: uniform fleet of every operation, great operational reliability, and award-winning services. So they have done a great job over the years, and that's why now they are getting reward of that. The way they've conducted the business and the way they've operated, that shows the strength in the management to handle the business, which is a quite a difficult business to handle. Now talking about financial highlights. So talking about financial highlights, if you talk about revenue from operation, it has gone up. You can see here almost, you can see 21-22 was low because of COVID crisis, but after that there is almost 110% jump in financial 23. So that's a very good sign. EBITDA margin also, you can see here it has gone up, which was, of course, it was lower during the COVID crisis financial 21, but before that it was 14.2. Now it has jumped to 13.4, and slowly and gradually, no, I think this will recover a lot, because now normalcy is hitting, and now after that, no, there is a revenge tourism, and that is what helping IndiGo to have a very good performance. Profit after tax. So profit after tax, you can see here, of course, the loss was very deep during the 2 years. No, after COVID crisis, no, it has gone down. Earlier in 19, they had a 157 crore profit. In financial 23, almost 305 crore loss they have. But now slowly and gradually, I think that profit margin will be up. So things will be much better from here, and that is what the management is also talking about. Again, total cash, you can see here the total cash, which was around 15,323 crores, then 20,000, 18,000 crore. Now it has gone to almost 23,000 crore. So total cash is also on a upward trend. So that is a very good sign. Now talking about available seat kilometers. So what is available seat kilometers? So how much seat is occupied? So seat is occupied across the kilometers. If you think about almost, no, there is a 62% jump. Okay, so number of seat available at various kilometers is almost 62% jump. So that is a very, very good sign. Load factor. So talking about load factor, no, you see here, earlier there was a drop in the load factor from 85.8 to almost 69.4 because of the COVID. Now there is a good jump. So now again they are reaching it to 82%. Load factor is nothing but the percentage of seat covered. So that is occupancy rate is also going very high. To talk about employees, see, this is one airline industry. Normally you can see in airline industry, no, normally the employees are reduced, but here is the place where, no, 2020 it was around 27,000. Then of course COVID it was lower, but now again they have gone to 32,407. So which is one of the highest among the last recent years. And you can see in aviation industry, no one has this type of employee fleet, which shows that IndiGo is going strength to strength. Again, talking about fleet size. Fleet size, you can see here in 2019 it was 207, which has gone to 262. Then financial 21-22 is almost same, but now there is an increase to 100,304. Again, there are a lot of outstanding order with Airbus. So now they are going to increase their fleet also. Maybe by 2030 it may get double also. Also fleet modernization. Talking about modernization, IndiGo is working a lot and they are bringing from CEO to Neo format, and in that you can see there is a 15% more fuel efficient. So you can see at 80% of IndiGo fuel is new generation, which is a very good sign. That is where the fuel cost is saved. So in 17 it was 85% old, but now it is almost 80% new and 20% old. So that is where, no, you can cut down your cost, and operationally also it is quite beneficial for the company. CO2 emissions. So CO2 emission is also, there is a 20% reduction. Now we have to understand what is the main expense the airline company is having. Talking about the main expense, the main expense are normally, if you see, the fuel is almost 30%. So 30%, the major cost is fuel. Lease is 16%, operational expenses 14.3, DNA is 12.5, salary is 11.8, others are 11, and airport charges is 9, interest is 5.2. So major cost is fuel, but this fuel they don't have a control. That is not control. That is, you know, that globally, wherever crude oil prices goes up, the ATF prices also goes up, and that is the main expense. Again, other expense 11, salary is 11.2, and DNA is 12.5. Yes, operational expense they are going to try to control as much as possible. Now let us see which are the costs they are not able to control. So talking about various costs where the company has a very little control. Our first is that fuel ATF, airlines has to spend normally 30% of their income to buy aviation turbine fuel, which is, as I told you, is a 30% of the cost. Again, after the Russia-Ukraine crisis, this cost has gone up a lot, almost double. Again, lease and rent, nearly 16% of the income goes to lease and rent. Sometimes they rent an airline also, plane also. So that is where, again, lease like airport and all that also there have some space available. Again, airport charges, under this head, airline companies pay almost 9% of their income. Developed airports of Delhi, Mumbai, Bangalore, Kolkata, Hyderabad, etc. charge higher rates. So more the developed cities are there, they charge the higher rate from the aviation company. The above three expense includes almost is 55% of their income. So this fuel, lease and rent in airport charges are almost 55%. Why I'm telling you this, that whenever you are actually researching any aviation company, this is what you have to see. They have no control over these rates. Understand, they have no control, and again they can also do less for fuel efficiency of aircraft engine. So that is what, these are the expenses where they have no control. Again, these are the expenses where they have little bit of control. So salary and employee benefits, typically airlines spend almost 12% of the income on salaries etc. of employees. Other expenses under this head, what mainly comes are the administration expenses. So travel, conveyance, accommodation, insurance, etc. Typically it is almost 11% of their income. Again, interest and payment, again, they basically know most of the companies are in losses, so they manage their cash flow from short term borrowing and all that. So approximately 5% of income of airline company goes to the interest payment. And again, one of the best thing for this airline company, that is IndiGo, is that, as I told you already, the cash is more than 20,000 crore rupees. So that shows that they are sitting on a good pile of cash. So that's always go good for the company. Now talking about income versus expenses growth rates for airlines. Now if this is very important table to understand. You can see here that it is compared with IndiGo with the SpiceJet. Okay, so pre-COVID, if you see, the total revenue and total expense of both were same. However, here the SpiceJet total revenue was less and expense was less. However, after you can say COVID period, there was a big drop in both the places. Okay, after COVID, you can see here there is a good jump where total revenue is increased, then expenses for IndiGo and SpiceJet also. In SpiceJet, total revenue is less than total expense. So if you see growth against last 5 years, in last 5 years, the total revenue has gone up by around 7.9.5%. However, expense has gone above 8.6%. The reason I told you, oil prices, lease and rental and airport charges and all that. Even SpiceJet growth is less revenue and expense is much more than double. So as I told you that both the airlines income growth has been slower than the expense growth in last 5 years. So this is what actually taking away all the profitability. And oil prices, if goes down from here, that will be a big breather for companies like IndiGo. So normally whenever there is a oil prices on the upward trend, this company does not do well. If you talk about 12 years, how is the, you can say, passenger traffic? So here the last 12 years passenger traffic is given here. You can see it has gone up from 99 to 2004. Okay, and again 2000, and again there was a big crash during the COVID period across that, talking about domestic, international and total passenger. But however, from here 22 23, the trend will be much more upside, and that will be beneficial for a airline like IndiGo, because they are having a monopoly. 54% share is of IndiGo only, and that will be a big plus point. So here also they are quite working on capturing the complete demand of the aviation industry. Talking about order track record of IndiGo, you can see here the number of aircraft order placed. So you can 2006 or 100 only, 2011 180, 2015 250, then 2019 300. However, 2023 it is almost 500. So you can see such a big jump on the number of aircraft they have placed. So that shows how much bullish they are regarding aviation industry. And of course, if Indian economy is going to grow a lot from here, that is going to happen. Again, IndiGo's monthly number of deliverables trend. So you can see here that deliverables trend is also on a much higher side. So that is also very good. And normally the delivery happens, that means that they can put more planes into operation, which will help them a lot. Also, IndiGo fleet size trend. You can see here the fleet size totally. Now these are the fleet. Okay, so 274 silicon, now it is around 302 and 304. So now the fleet size has also increased compared to the earlier years. IndiGo has a strong outstanding order book of 980 aircraft, including recently placed 500 aircraft with Airbus, and target to double its fleet size by current year 30. Once you place an order, it is not that you're going to get the plane tomorrow. It will take number of years, but yes, by 2030, whatever they have 300 aircraft are there, it goes up to, maybe it be going up to almost 600. Again, healthy passenger volume and all that is going to help them a lot. Okay, strong ticket size and with an ease in fuel price will support earning momentum financial 24. So hopefully next year onwards the fuel price goes down, and if fuel price goes down, this company will be benefited a lot. Looking forward, tailwind like moderation in ATF prices, steady price ticket pricing, consistently high load factor insists confidence, substantial earning momentum. You know that ATF prices depending on the crude oil prices. Currently it is roaming around 85 to 87, which has gone up to 95, but again gone down to 85. if it goes down below 70s and something like that, no, I think this company will be benefited a lot. Again, given a free cash flow of 7 billion, Indigo is evaluating investment in aircraft and related assets. So as they have a more and more cash flow with them, they don't have to worry about no working capital and all that, and they can also invest whenever they like. So this is where, see, in aviation industry you are getting lot of opportunity, and this company can take benefit of that opportunity, because always there are cash problems in this sector. So this is all about Indigo. I think Indigo is very well placed here. The way they have conducted the business over the years, and looking at the future prospect, the cash they have, again the order they have placed, again the 54% of aviation industry in India is being controlled by Indigo, and they have a very strong operational metrics, and from here they are going to improve a lot. So I am quite bullish in this company specifically, not overall at the aviation industry overall it's a good, it is growing a lot, but when it comes to a company operating in aviation, for them there is a big problem. But somehow Indigo is a completely different animal. The way they have handled the metrics, and again the way they have operationally become efficient in this industry is quite commendable. So from here also, no, if you want a steady return, I think Indigo is one of the company you can go for it in aviation industry. So hope you like this video, guys, and just type in the comment box, are you having Indigo or not, or any of the other airlines? So do type in the chat box. So thank you very much for watching the full video. Hope you till now subscribe my channel and you like this video, and I'll see you soon in the next video. See you then. Bye bye.